The question I'm paying a lot of attention to right now is whether this AI wave is constructing a boom or a bubble, because knowing where we are in the cycle really, really matters. Every major transition runs on a feedback loop between intelligence, energy, and capital. AI is just the last turn of that flywheel.
Every conversation about AI turns into a conversation about energy.
This is one of the most misunderstood parts of the AI story.
Thank you for joining us, Azeem. I'm Ryan Rigney. I work at A60Z. I work on the Speedrun team. We have a Substack as well, and we're big fans of Azeem and his work on Exponential View. This is one of my favorite newsletters on Substack. Anyone in our audience that hasn't already subscribed, you should. Azeem, you're an author, investor, obviously founder of Exponential View. You do a lot of things. You're a co-chair on a council at the World Economic Forum. Is it called the Global Futures Council on Next Generation Computing?
As many adjectives as you can possibly string together to make it a mouthful and incomprehensible.
And you're fellow at Stanford University and Harvard Business School. So Azeem, thank you for joining us for this discussion.
My pleasure, Ryan. Thank you. And thank you for being so supportive over the last year on our endeavor.
Of course. Okay. So I'm curious. I actually know, I know a little bit about your background, and I read your book, which was then called Exponential Age, back in 2021 or 22, I think shortly after you published it. I remember being sort of blown away by the arguments you were making then and sort of the data you were sharing in the book. It was probably the heaviest dose of techno optimism I'd ever taken in one go up until that point. And I know, you originally earlier in your career came from a journalism background. A lot of people in journalism don't share this sort of optimistic view, or I think even like a belief in exponential technologies in a lot of cases. So can you sort of tell the story about how you came to be fascinated by, interested in exponential technologies?
Absolutely. Well, I'm really, really happy to be here, Ryan. And for those who are listening who don't know me, I'm a founder and I'm an investor, and I study how energy and intelligence reshape economies, and I share all of that work with the world through Exponential View. I've actually spent most of my 31-year career building and backing technology founders and building companies. But for some reason, that 3-year stint as a journalist in the mid-90s, when I simply couldn't get a job anywhere else, is something that people often bring up. But the funny story, though, is that I've always been a founder. I founded a student newspaper at university. I founded a few societies at high school. And when I was a journalist, I was pushing the boundaries. And I set up the first news website at the Guardian newspaper in 1996. And, I had to do a lot. I wrote stories, but I also wrote some of the code. I hustled the servers from Apple Computer back then. I hustled an internet connection from an internet service provider that's long since gone. It was called UUNet in the US and a slightly different brand in the UK, and an Ethernet switch. Not a fast Ethernet switch, not a gigabit Ethernet switch, not InfiniBand, a 10 megabit per second Ethernet switch.
Wow.
And I put together that first website with a little bit of air cover. And it was an amazing time, because I remember when we launched, there was no data center. The data center was a room in the basement of the building, and there were no load balancers. You didn't have AWS Elastic Load Balance, but the sites still got a lot of traffic. And this was the Guardian's first load balancer, my right hand, because I had 3 front-end servers sitting behind a switch, and one of them would have a memory leak and get overloaded, and I would physically pull out the Ethernet cable and plug it into hot swap number 2, which had just rebooted. I would reboot the first server, and then 20 minutes later, server number 1 would fail, and I would repeat the process, and I would round robin for the peak hours. So it's kind of an amazing time, super, super hustle, and always kind of coming out of that founder instinct in me. But the real turning point was probably back in 2009. So I set up my second or third company, which was a machine learning company called Peer Index. And we applied machine learning to what were then large-scale social graphs. So our biggest graph had 400 million nodes and billions and billions of connections. And that company was acquired. And around that time, 2014, 2015, I was becoming really interested in AI and trying to understand these exponential curves that had accompanied my career for 20 plus years.
Right.
So what I wanted to do was explore these questions in public. I'd been a founder focused just on building the plane in midair and finding a place for it to land for 7 or 8 years. And I just started writing as a solo explorer, being intellectually curious about my observations. Every Sunday, I sent it to 22 friends. About 9 months later, a young man called Mark Andreessen tweeted about it, and we had a big spike in subscribers.
Oh, wow.
And
I didn't know this.
All over the years, I have another Mark Andreessen story we might get to later in the discussion. But over the years, all of that work focused on a single observation. And that's what I'm really focused on today, which is every major transition runs on a feedback loop between intelligence, energy, and capital. And AI is just the last turn of that flywheel. And so with all of that, the question I'm paying a lot of attention to right now is whether this AI wave, accompanied by all the stories we hear about energy, is constructing a boom or a bubble, because knowing where we are in the cycle really, really matters.
Yep. That's a great transition to this next question. I had to ask you about this, is AI a bubble question. You wrote a great piece together with Nathan from your team a couple of weeks ago, and it really did the rounds. You called this the biggest question in tech, and I have to agree. It's, if AI is a bubble, there's a lot of money on the line. I think one thing that really differentiated your approach to this question was that you came up with a framework for really evaluating, what do we mean when we say bubble? How does this compare to other bubbles in the past? I'm wondering if you can sort of talk us through the research you put into this question and some of the conclusions you came to.
Yeah, well, thanks for the kind word. And you gave us some great early feedback on the post, and really, really appreciated all of this. If we start with some fundamentals, we agree what we're talking about. It is the biggest question in tech. It's also the biggest question anywhere right now. You've heard the World Bank, the IMF, and all the big asset managers and all the well-known Wall Street titans talk about this. But some of the fundamentals, what is a bubble? Let's do bubble by more than just vibes. Let's do bubble by some robust criteria. And these are the two criteria. Number one, you've got to see a 50% decline in stock prices, peak to trough. Otherwise, what you've got is a correction. And we saw that 50% or more after the housing bubble. We saw it after dot-com and telecoms, 2000, 2002. That's really important. It means that the equity markets have got scared and investors have lost recent money. The second thing you need to see is a 50% decline in the level of productive investing capital. So not people buying shares, but venture capital going into companies or capital going into building out infrastructure. You need to see a 50% decline in that. Otherwise, it's just the wobble of year to year. And those are my strict non-vibey criteria for what forms a bubble. And to know whether this AI boom meets these criteria, we built that framework, the AI boom bubble dashboard. And it's a little bit like a pilot's cockpit instrument panel, which shows him or her how well the plane is flying. Fuel, oil pressure, altitude, attitude, those types of questions. And we identified 5 key gauges across which you need to read to understand where you are in the flight path. Are you still in the boom phase? Are you approaching a bubble phase or not? And I would love to dissect every gauge, but I think it's really important up front for me to share what I'm seeing in the market and why that anchoring is so important. And the first is the upside is real. We are seeing real customers spending real money on product and coming back to buy more. ChatGPT's retention numbers, the rate of growth of enterprise AI spending and API spending, and companies who have figured out how to use this quite difficult technology are seeing productivity impacts, they are visible. Of course, not every company in America, but the early ones are, and they will be joined by many, many more.
Right.
It's not a mirage. It's a genuine industrial shift. Booms, though, can create fragility. And so systems can get more fragile as more investment capital comes in, as the hypesters move in, as people try to bite off more than they can chew. But the system can still strain without breaking. And so we are seeing some of that strain emerging in these moments of investment. We're seeing debt financing, maybe we're seeing circularity, maybe we're seeing companies trying to do sort of things a little bit too clever. But this alone doesn't mean we're in a bubble. And, that's where the 5 gauges are designed to help people like you and I and all the people watching understand where we're going.
Yeah. And I would encourage anybody watching, go look up this post that we're referring to on Exponential View. It's just called "Is AI a Bubble?" ? One thing I noticed about it is that several of sort of the equations for the gauges depend on revenue growth, right? Like it's really these companies, some of these companies are making a lot of money. You look at OpenAI or others, and it seems like the speed at which their revenue is increasing is a really important factor. Do you agree that that's sort of like, is that sort of the main one you're looking at, or is that one of the simplest, KPIs to keep your eye? If you had to look at one, is that the one that, you're most focused on?
The happiness is free cash flow. And if you can't get that, happiness is rapidly growing revenues from real customers who love your products. And that is what we're seeing. So if I'm keeping an eye on two measures, it is first and foremost, is revenue growing really fast? And I'll just dive into that in a second. And the other is the quality of funding very, very good? Is it established venture capital firms like A16Z? Is it well-known, well-heeled patient investors around the world? Or is it tourist capital being sold complex things they can't understand? Because those things can blow up as they did during the housing crisis. But revenue is the most honest signal we have because it tells us where the customers are deriving value. And it's not just OpenAI. I'm an investor in a company called Fixer, Fyxer. It's a plug-in to your email, and it uses a lot of fine-tuned, customized data to help you respond to emails automatically. And I remember talking to the team at Fixer a couple of years ago, or a year and a half ago or so, saying, I like what you're doing, but I really don't buy your revenue forecast for the next 12 months. They'd got some number up there that was really very high. And so I put some, invested in them. And lo and behold, within 9 months, I think they were nearly 2 times further their 12-month forecasting the business plan that I didn't believe in the first place. And so the revenue trajectories of lots of these companies is remarkable. If you look at Anthropic, it started the year in a $1 billion ARR, annual recurring revenue. By July, it was at $5 billion. And now we're in October, that it looks like it might close the year at $9 billion annualized. So that's a 9x on a run rate basis increase in 1 year for a company that's doing over $1 billion a year. I mean, it is really, really astonishing. Of course, this could stop. I mean, it doesn't want to stop instantly, but we are betting, a lot of us, in the market in general, that these rates of growth remain high. And so that's why in our dashboard, we distinguish between absolute revenue numbers. We call that industry strain. So the amount of CapEx that the industry is covering through revenue, which we expect to always have an overhang in the early years, and revenue momentum, which is the rate at which revenue is growing year on year. We track dozens of companies to try to figure that out.
One thing I want to ask you about as well is energy. It seems like almost every conversation about AI turns into a conversation about energy at this point. Even sort of the size of data centers is starting to be measured, gigawatts and things like this. You saw, I saw you take a sort of contrarian stance recently on what the energy demand from AI could mean. In particular, you linked sort of favorably to this piece by Julian Alexander Brown that was really interesting, that laid out this case that, essentially you could see the demand being generated by AI leading to a faster energy transition. Because in some ways, the costs, the economics of renewables has finally gotten to a point where it makes sense to go renewables default, right? When you're building out new energy capacity. I wonder, I wonder if you could speak about that a little bit. And then I have a more pointed question here, which is sort of when people outside of the Silicon Valley bubble come to you to expand their own understanding about this, how do you respond when they ask about energy concerns? Like, what do you tell them?
Yeah. Well, this is one of the most misunderstood parts of the AI story. Yes, relative to my very first data centers, which was three Apple Quadra 8150 Max and a 6150 Centra, pulling a total of 800 watts of power. Today's data centers are a bit larger than that. In reality, by the way, they're just on the same exponential trend that data centers have been on for 35 years, starting from the first server under your desk.
Right.
And AI does consume and will consume vast amounts of power, but the American energy system, the global energy system, is huge. And compared to space heating, electrification of personal transport, let alone heavy trucks, electrification of industry, it's just another thing that we're adding. And what I would say is that the American energy system has been really moribund for the better part of 35 years because people didn't invest in it. They didn't invest in the innovation. Nothing drives innovation as much as a massive demand signal. I'm talking someone from A16Z, and what do your investing partners do? They tell their founders, go out, talk to customers, get some revenue, go where the revenue's going, figure out products they need. It's exactly the same. This is a demand signal that is going to force innovation, and that innovation is going to be helpful innovation. It's going to be around the growth of renewables, around the growth of small modular reactors in nuclear fission, in fusion. It will be innovation in storage. It'll be materials innovation in high voltage direct current lines. It'll be innovation in cooling systems. It'll be, and on we go.
Right.
And these are customers who are by which I mean the hyperscalers. They are captive customers. The existence of these trillion-dollar businesses is going to depend on the market supplying them with this energy and the products that they require. And so what you have is a certain degree of certainty. I mean, if you were able to build power transformers more cheaply and quicker than an Eaton or a Siemens or a Schneider, you'd have your hand snapped off by Meta and by Microsoft and by Alphabet, ... So yes, it's a brutal demand signal right now. And yes, it's constructed all sorts of bottlenecks in deep parts of the industrial stack that we software technologists don't really often think about.
Right.
But it's productive. I don't actually see AI as a threat to the modernization of the US energy grid. I don't see it as a threat to this notion of the energy transition, the arrival of new energies, fusion, small modular, renewables. It's a forcing function that will accelerate it. And it's the same feedback loop that we've seen time and again. I talked about the intersection between energy intelligence and capital. AI is demanding more energy, which is forcing new novel solutions, and it's attracting more capital to build a 21st century infrastructure.
Yeah. One of the reasons I think I find this compelling is some of our energy technologies themselves seem to be on exponential learning curves, right? I wonder if you could speak a little bit to that. Like, I still think it's kind of surprising. Most people don't know sort of what's been happening. I mean, for decades at this point with solar, but certainly with batteries as well. Like, what are the main sort of exponential energy technologies that you're paying attention to?
The key is in the word, what you've just said, technologies. Energy has become a technology, and a technology is fundamentally things getting cheaper. It's things getting cheaper through learning rates. It's things getting cheaper because they lend themselves to manufacturing economics. Learning rates, manufacturing economics intersect, and we call that Moore's law within the silicon industry. Up until we got to energy as a technology, which was really the arrival of solar and batteries about 50 years ago, energy was driven by the winds of the commodity markets. In other words, pulling stuff out of the ground, imagining that it's scarce, and being at the whim of the regional autocrat or the monopolist or whoever else it was. And so energy was not something that lent itself to that beauty of Moore's law. It now is. And so the range of technologies that are coming across the pipe, we talk about their learning rates, whether it's solar, whether it's batteries, whether it is SMRs or fusion at some point, will be technologies of providing energy whose cost curves will look more like the cost curves of the silicon chip than they will like, the random price of a gallon of oil of gas at your gas station.
Right. Okay. I want to switch gears a little bit and ask you just non-AI related.
Oh no. Okay. I'll do my best.
Well, no, this is something you know quite a bit about, which is like sort of building a media company and building reach. Something interesting we're seeing with founders is they all are attempting to build some sort of owned channel where they can reach whoever it is, customers or investors, right? Like everybody, we're now at a point where if you have some amount of reach and following online, you can go direct and you can talk to people yourselves. You don't have to go through intermediaries. You've been building Exponential View, I think, since 2015. Is that right?
Yeah.
Yeah. I mean, 10 years on, I mean, this is one of the sort of better developed sort of long-lived newsletters really out there. So I'm curious sort of about your journey as a media founder, how you fit, if you'd like to opine sort of about, how you feel about the future for media companies like yours, especially ones building on Substack. I think we were talking about sort of the new features coming down the pipe and how they're holding together. But yeah, I'm curious about how you think about yourself as a media founder and your plans for the future.
Well, yeah. It's been 10 years, and I am hoping that Jeff Bezos' old line, which is overnight success takes at least 9 years, is going to come true. Always, as a message to the founders who are listening in on this, just the key path to success is staying in the game. And when I started Exponential View, it was a Sunday email I wrote for friends, and I was traveling a lot. I would often be sitting on the floor in Oslo airport, trying to catch the 9 p.m. flight back to London to be home by 11:30 and, typing away. It's grown into a research and media company. We've got a team. There are 5 other humans and dozens of AI things that are going on in the background. And it really does inform a wide stack of people and decision makers. So, for example, last year, I've tracked this. I don't have the numbers for this year yet, but I spoke to investors representing roughly 1 in 6 of all the investable dollars on the planet. So 16, 18 trillion dollars, talking to them about some of the issues we're talking about now. And regularly we're talking to, I'm talking to asset allocators, both in private and public markets and family offices and sovereign wealth funds, and large company boards who are thinking about billion-dollar budgets and how to shift them and when to think about these sorts of things. But also we have built a research capability. So the dashboard essay that you alluded to about the AI bubble is sitting on top of a really, really robust series of models that drive each of the individual gauges that are updated regularly. And it is research grade quality. And that's not the only one we have. We have our own models of the energy system, of AI improvement, and so on. And then, of course, it supports conversations like this. The thing about this media model is that it doesn't work on the basis of scale for its own sake. It is depth and it's trust. So we have grown organically. Of course, it's sensible for me as a founder to experiment with a bit of ad revenue here or there to try to bring readers or customers in. But ultimately, this is driven by depth and trust. It's driven by my experience and my judgment. I've invested through the dot-com bubble. I invested through the housing bubble as well. I was investing mostly in public equities back then. So I have some experience that I can bring to bear. I founded a bunch of companies. I've invested in 60. And so I need to translate that trust and that depth both into the team and also out into our output. What Substack has allowed us to do is connect directly with that audience and get to know them, get to understand them, and ultimately to own that relationship. And if we loop all the way back, what we've seen in Exponential View, I talked a little bit about those feedback loops between energy and intelligence. And we have a feedback loop as well, which is that loop between clarity and curiosity is something that can scale sustainably. And that's what we've seen over the last several years. And I think the next couple of years we'll see that compounding effect and that hockey stick effect.
Well, we'll wrap there. Azeem, thank you so much for joining us again. This was a really fun conversation. And I'll say it again, if anyone was following this and doesn't already follow Azeem's work over at Exponential View, go subscribe. It's a fantastic newsletter, a fantastic resource. And so, yeah, we appreciate you joining us.
Thank you so much, Ryan. Really appreciate it.